Hey, it's David Lucas here, and I want to take just a few moments to update my referral partners as well as clients on a couple of key points I think are very timely and relevant. If you're even thinking about purchasing a home in the next year, I'm going to give you two compelling reasons why it makes sense to go ahead and move those plans forward and potentially purchase in the next few months versus even purchasing over the next year. One, the media has been very, very good about getting the word out about the homebuyer tax credit, and this is a true tax credit, dollar for dollar against your tax liability. Currently, the extended homebuyer tax credit allows first-time homebuyers, who are defined as, of course, anyone who has never owned a home before, or anyone who has not owned a home in the last 3 years can qualify for up to an $8,000 tax credit. Now, also, anyone that has owned a home consecutively for the last 5 years can qualify for up to $6,500. So this can equate to major savings. Now let me give you the key dates here in order to qualify for this homebuyer tax credit. April 30th, you need to have a fully executed contract, and you need to close on your home purchase or home loan no later than June 30th of 2010. So, the tax credit is one very compelling reason why it makes sense to go ahead and buy sooner rather than later. But one less known but nonetheless very important issue that really impacts homeowners, or at least those of us that need a mortgage to purchase a home, is that of the Federal Reserve's Purchase Program of mortgage-backed securities. Now, all mortgages today, FHA, VA, conventional, rural development, which are the majority of the mortgage market, are all driven by the interest rates that are attached to those home loan programs are driven by the trading of mortgage-backed securities, which trade on the Chicago Board of Trade. Back in January of 2009, when the housing sector nationally really started to sputter, the Federal Reserve stepped in to help stimulate the housing and real estate sector of the economy by committing to, get this, committing to buying $1.25 trillion of mortgage-backed securities. Well, the news is that that purchase program ends in March. In fact, we are so dead. A lot of people speculated that the Federal Reserve might extend that program. It's not the case. The last 3 times the Federal Reserve has met, they've explicitly said they are not extending the mortgage-backed security purchase program. That will end March of 2010. Most analysts, as well as myself, agree that this purchase program has suppressed interest rates by at least a percentage point. So what does this mean? After March, you are going to see a sharp increase in interest rates, almost overnight. By the middle of the year, I will absolutely be seeing rates in the 6% range. It's going to be, 2010 is going to be very, very volatile. And at the end of the year, we might even see rates tickle 7% a few times. So again, let me leave you with this regarding interest rates. If you pay, a homeowner pays just 1% higher interest rate, they actually have to, most of the time, have to negotiate $10,000 less. Get that, $10,000 less on the purchase price to equal the same payment. So for every 1% increase in the interest rate that a homeowner pays. So these two things, by waiting, can literally cost a homeowner through the lost tax credit, as well as rising interest rate environment that we're going to see in 2010, can literally cost them tens of thousands of extra dollars over the life of the loan or the time they live in that home. So, I talk about a lot of these topics. Many of you know that I have a radio show that airs here locally, and you can also go to familymoneyshow.com, and we have a podcast that you can subscribe to, and we talk about a lot of these topics in great length, as well as I write and maintain a mortgage blog. You can go there, and that's dailymortgagereport.com. Again, that's dailymortgagereport.com. So I hope that these ideas these are something that is going to compel you to consider purchasing sooner rather than later. And this is David Lucas, and have a great day.